Ross needs an auditor who knows the industry as well as he does. For Brian, it's whether he can call the partner at midnight.
So?
They both came up with the same name, BDO.
Huh.
People who know BDO.
Hi, everybody. Welcome to On the Money. I'm Maria Bartiromo. Easy money, what a Fed decision will mean to your wallet, whether you should care about banks in Cyprus, and is Dow 15,000 next? Plus, reading the tea leaves when it comes to coffee, my conversation with Starbucks CEO Howard Schultz about the minimum wage, farming, and high tech in the world of Java. How is that partnership with Square going, Howard? Plus, can anybody topple Apple from its smartphone perch? We'll see what's new from two new competitors and whether Apple is ripe to be plucked. On the Money begins right now.
This is America's #1 financial news program, On the Money. Now, Maria Bartiromo.
Here's a look at what's making news as we head into a new week on the money. The Federal Reserve speaks and the markets listen. At its meeting this week, the Fed announced it will maintain its near zero interest rate policy and will continue its purchases of $85 billion of mortgage-backed securities and Treasury bonds every month to keep interest rates low. The Fed also slightly cut its economic forecast, saying that the most growth we will see this year is 2.8% GDP, while improving its job outlook, predicting unemployment may fall to 7.3% by the end of the year. The Fed also saying inflation is likely to be tame. Federal Reserve Chairman Ben Bernanke said the Fed needs to see consistent growth before slowing down any of that stimulus.
We are seeing improvement. I think one thing we would need is to make sure that this is not a temporary improvement. So we've seen periods before where we had as many as 300,000 jobs for a couple of months, and then things weakened again.
The markets had an up and down week. The Dow Industrials touching an intraday high on Wednesday after the Fed's announcement, but then having the worst day in 3 weeks on some weak earnings and worries over Europe and in particular Cyprus. The markets rebounded on Friday, though. Meanwhile, in Cyprus, there were long lines and empty ATMs after a crisis left a $13 billion hole in the country's banking system. A bailout proposal from the EU came with strings attached in the form of a tax ranging between 6 and 9% on federally insured bank depositors in Cyprus. Most people I spoke to thought it was a terrible idea. Here's what former Treasury Secretary Larry Summers told me.
This idea that the little guy is the first victim in going after moral hazard is a new idea in resolving financial crisis, and is not a very good idea, as the pictures of people lining up at the ATM machines demonstrate.
Meanwhile, important earnings news this week. Software giant Oracle missed earnings expectations, as did transportation bellwether FedEx. General Mills, housing company Lennar, and Williams-Sonoma all came in ahead of expectations. Also, more signs of strength in the housing sector to report. New home starts rose 0.8% in February, about what analysts were looking for. That's an annualized rate of 917,000 new homes. The two competing stories of the week, the Federal Reserve continuing its easy money policy and the banking crisis in Cyprus. Which is more important to your money? Joining me right now to talk investing, Liz Ann Saunders is Chief Investment Strategist with Charles Schwab, and Heidi Moore is U.S. Finance and Economics Editor at The Guardian. Ladies, good to have you on the program.
Good to be here.
Thank you so much for joining us. So, Liz Ann, let's talk about some of the news of the week. The Fed staying pat, that easy money policy, $85 billion worth of bonds and mortgage-backed securities, buying those every month, keeping interest rates where they are. Were you surprised at what came out of the Federal Reserve? What does this tell us?
No, it wasn't surprised. I mean, they did slightly downgrade their GDP forecast. Then again, they are well above the consensus, so I wouldn't view that as terribly concerning. And I think what's important this year is we've had these 3 consecutive mid-year slowdowns in the economy. We had it in 2010, 2011, 2012. Everyone's on the lookout for it again. I think what the Fed has been doing represents a key difference between those 3 years and now, because then we had stopping and starting with QE. You had end dates, so you had the market in anticipation of an ending and then wondering whether they were going to pick it back up again. Because this is open-ended, I think the fuel that it provides is longer lasting and represents a key difference and part of the reason why I think we'll avoid this 4th consecutive slowdown.
Heidi, the other big story of the week is Cyprus, of course. Now, Cyprus, a tiny country, big banking system that actually is a big percentage of the GDP of that tiny country. So how does this play out? How do you think this gets resolved? And should we worry about an impact in the United States?
Well, we definitely shouldn't worry that it's going to impact the United States because we have different rules here. What happened in Cyprus was Europe likes drama. It's the birthplace of opera. It's the birthplace of a lot of forms of performance art. And I think you could see this as a kind of performance art. Initially, to save Cyprus, which has needed a bailout for well over 2 years, European authorities went for the splashiest potential option, which was to literally take people's money out of their bank accounts. I mean, you can imagine the outrage. It took about 3 or 4 days for them to back off from that deal. And I think what will happen to Cyprus, as it has happened to other countries, is that the real option, the real bailout, is going to be much slower, much more boring. It's going to involve, loans from the European Central Bank. It's going to involve, maybe loans from other countries. But it's going to be a very nerdy, wonky option. Maybe they'll shut down some banks temporarily. Not just close the doors, but actually shut down a bank, and they'll work it out. But you haven't seen the markets react at all.
And I agree. I think what was telling was the lack of reaction that we saw. We did not see bank runs in Spain and Italy. We did not see spreads really widened out. The most recent Spanish auction on the bond side went very well. So I think that was the most important message to take from this.
So you don't think this could ever happen in another country then?
It doesn't appear to.
Yeah.
I think you would think that this might have triggered some of those concerns in places like Spain and Italy, but so far, no.
No reaction. Heidi, what about that news conference following the Federal Reserve's meeting? And basically, Bernanke said he didn't think the markets were in a bubble. I found it interesting that he even took the question. Take a listen to this.
In the stock market, we don't see at this point anything that's out of line with historical patterns. In particular, you should remember, of course, that while the Dow may be hitting a high, it's in nominal terms, it's not in real terms. And if you adjust for inflation and for the growth of the economy, we're still some distance from the high.
Were you surprised that first he even took the question about the markets and then, basically said, no, we're not in a bubble?
Yeah, I mean, Ben Bernanke has never really openly spoken about his friendship with the markets, right? There have been a lot of accusations that a lot of what he's been doing in terms of stimulus has been designed to help Wall Street, not Main Street. And he's just kind of ignored that and hasn't said too much about it. But here he was taking a position on whether we're in a bubble or not. I think you can actually question that position a little bit because, corporate earnings have been a lot softer over the past couple of quarters than they were last year.
I'm really glad you brought that up. That is a critical point. And Liz, we're about to begin first quarter earnings reporting season at the end of March, of course, when the quarter ends. We heard from Oracle. We heard from FedEx. We had some disasters here. Stocks really went down on these disappointments in terms of earnings. What are you expecting in terms of first quarter earnings?
Well, I think you are going to see a shift because the dollar has been so strong, and that will probably be to the detriment of some of these larger, more multinational-oriented companies. So what I think you're starting to see again, and we've seen it several times in the last couple of years, is a bias again toward the smaller domestic-oriented companies, at least as it relates to the currency side of things. I think the reason why the market has not fallen off in the face of slowing earnings growth is that, number one, there's a hope and an assumption that we may be lifting in terms of the growth rate, and that Q4 of last year or Q1 this year might be the trough and we get a little bit of a pickup.
And more improvement later in the year.
Yes, and we're also, valuations on forward earnings are reasonably low.
Do you think the retail investor is back, Lizanne? Who is participating in this market right now?
Look, they're coming back, but it's not yet at a level which suggests caution. You had about $560 billion go out of equity mutual funds in the 5 years through the end of 2012, and only about $30 billion has come back in. So we're nowhere near at a point that would suggest a tremendous amount of froth or irrational exuberance. So I think it's good news that they're starting to come back. They're doing it very cautiously. They're going into defensive sectors. So this is very different than what we've seen at past market peaks.
How do you want to invest here, Lizanne? What would you be exposed to?
Yeah, I mean, we're keeping, from a sector perspective, our cards still fairly close to the vest until we get through some of these other policy issues, like the government shutdown, which seems to be out of the, not a problem right now, the debt ceiling. So we only have one outperform rating right now, which is technology. That's been a long-standing outperform for us. One underperform, which is consumer discretionary, which is a function of the potential for problems because of the tax increases. It turns out that's not having the impact on consumer spending as a lot of people thought.
Great advice. Ladies, thank you so much. Great to have you on the program. We appreciate it. Liz Ann Saunders and Heidi Moore joining me. Up next, we are on the money. What is Starbucks' recipe for success? My conversation with the company's founder and CEO about how he wants to do for tea what he's done for coffee, and how healthcare may not be so healthy a business. And then later, talking tough on the smartphone market. Can a new product from a galaxy not so far away take a bite out of Apple? What the latest smartphone innovations mean for your personal technology use. As we take a break, take a look at how the stock market ended the week. Back in a moment. Welcome back. President Obama pushing for an increase in the minimum wage to $9 an hour, but business is debating the unintended consequences of such a move. This week, I caught up with Starbucks chairman, CEO, and founder Howard Schultz to talk about that, farming, and how high tech is driving his business.
The big news of the day was taking our loyalty program and our mobile payment business, which is very strong in our retail stores, and leveraging it into the grocery stores. So a customer buying a pound of coffee or a bottle frappuccino at their local grocery store will get a reward and an incentive to bounce back into the U.S. retail stores.
Yeah, I mean, you have been leveraging technology for a little while. How is that partnership with Square going, Howard?
Really well. You know, we made a $25 million investment in Square because of the seismic change in technology and specifically smartphones. We are now the leading retailer and consumer brand in the world in terms of mobile payment transactions, over 3 million a week. So we are, I think, very enthusiastic about mobile payment, our partnership with Square, and these are very early days of what we're ultimately going to be able to do.
And you're also on an acquisition trail. We saw it with Evolution Fresh. We saw it with Teavana. Should investors expect even further deals in 2013?
I would say that if we do make any more acquisitions, they will be very, very strategic and very pointed to the fact that we want to add high-quality products and categories that would enhance the customer experience in our stores. We're off to a fantastic start with Evolution Fresh and La Boulange. The 300-store acquisition of Teavana, we believe we can have at least 1,000 stores where we can do for tea what we've done for coffee, leveraging the core competency and the infrastructure of the company, and eventually we'll take Teavana outside of North America.
And this week you acquired your first farm based in Costa Rica. Tell me about that strategy.
We are the largest buyer of high-grade Arabica coffee in the world. We're buying coffee from over 30 producing countries. We bought that farm for two reasons: to create very high-end, significant, sustainable practices that we can use as a model to teach other farmers around the world. And secondarily, and this is very important, we believe that there's an opportunity to use technology and best practices to cross varietals, not unlike the wine industry with grapes, and create micro lots of very special, rare, very high quality coffee that does not exist, that we can bring into our stores and provide long-term differentiation between us and everybody else.
Okay, let me move on to what's going on in the U.S. Howard, what are you seeing in terms of economic growth?
I think when the 2% payroll tax went into effect in February of last month, the entire retail and consumer category in terms of consumer behavior was modified as a result of that 2%. We have since, and I think others have seen it come back. I am cautiously optimistic about the economy. It seems as if, despite the unemployment, despite the debt, that consumers are spending, and we are enjoying the same level of success that we've enjoyed the last 12 months in the U.S. business.
What about the minimum wage in this country, Howard? Is $7.25 enough? Lots of pushes to take that up to $9, as President Obama has talked about.
I think the minimum wage issue is a double-edged sword. And what I would not want to see is the minimum wage go up, and as a result of that, employers starting to hire less people or cutting people's hours. And so you have to be very careful of the unintended consequences. on balance, I am a supporter of the minimum wage going up, but I think we got to be very, very careful. And I would say, in terms of the health care law that's going to go into effect, there are significant unintended consequences that was not thought out as much as it should have that will significantly affect the cost structure of small businesses. And this is an example where I think you've got to be very careful with this kind of transformation legislation that ultimately perhaps has a negative effect on the economy.
Before you go, you got to give us some reaction to this comic book, basically about your life. You're now a superhero, Howard.
It's one of those things where I just woke up one day and I could not believe that somebody would spend the time writing a comic book about me. There must be a lot more important things to do.
I love it. Howard, good to have you on the program. Nice to talk with you. We appreciate your time tonight.
Thanks, Maria. Take care.
We will see you soon. Howard Schultz is CEO and chairman of Starbucks. Up next, we are on the money. The newest battle in the smartphone wars is the iPhone losing some of its hip in favor of newer models. We will get a touch of the competition. And look for us on Facebook/Maria Bartiromo. Back in a moment. 125 million Americans now own a smartphone. Last year was the first they took a majority of market share from all mobile phones in the United States. Now, Apple's iPhone has dominated consumer imagination now for years, but now fresh competition is heating up the smartphone wars. Dan Ackerman is senior editor at CNET.com to talk more about it. And Dan, it is good to have you on the program.
Good to be here.
So, wow, a lot of different phones on the market. Apple and Samsung accounting for 1 in 2 smartphones sold today. Tell me about the smartphone market today, what the competition means for the choices out there.
Yeah, I think we've finally gotten to a point where it's not just Apple and the iPhone anymore. We've pretty much set Samsung up as sort of the Pepsi to their Coke, and these two companies really control most of the market share. And when you hear about a hot new phone, it's going to be from one of these two guys.
You know, I think it's really interesting that there are 5 billion cell phones on the planet versus 1 billion PCs. Right there, that tells you the story.
Especially,
everybody wants a phone.
Yeah, in a lot of countries where you don't maybe have a laptop with you or doesn't have a big computer culture, you've got a phone with you because that's good for sending data and voice and surfing the web.
So let's talk about some of the smartphones out there. Samsung just announced the S4 Galaxy phone, splashy event that they had about that. What's your insight about that phone?
Yeah, that's the big 5-inch phone they had at a big press event a couple weeks ago. I checked it out. You know, it's a really nice phone. It's got a huge screen. These big 5-inch screens, 4.8-inch screens, they really make these much more like portable computers. It does a lot. It's got a great camera. My big problem is it's a plastic phone. And when everyone else has a metal and glass iPhone, that's tough to compete with.
Plastic phone?
I know. Why do they keep making these plastic phones? I don't understand.
What about the BlackBerry 10? Now officially available in the United States. Everybody's been waiting for this new BlackBerry. What do you think of the phone? You brought it here with you.
I've got the BlackBerry Z10 right here, and this, of course, is BlackBerry's latest attempt to kind of get back in everybody's good graces. It's a crossover device.
It looks like the iPhone.
It looks like the iPhone. It looks like the Samsung phones. It looks like, you know, it's thin, it's brick-like, it's got a big screen, it's got a nice camera. So it does pretty much everything these other phones do, but it's only just as good as them. It's not really better, and it's tough to bring people back to BlackBerry without a product that's really better.
So the company is no longer called Research in Motion. They're calling themselves BlackBerry. What will this revamp of BlackBerry's branding and this new Z10 phone mean for the business?
You know, I think for a couple of generations of products now for them, they've really tried to sort of nail this consumer product that's sort of a big, slick smartphone without the physical keyboard, although they still have those. They have not succeeded up until now. This one, they've got actually some good buzz building on it. The reviews have been good. People like the hardware now. People like the software now. They sold more than they expected in the initial launch in Europe. We're going to see what it does here.
What about the HTC One? That's a new version expected to be available any day. You brought that as well?
I've got the HTC One right here, and that is another really nice smartphone. You know, it's very similar to an iPhone or one of the Samsung Galaxy phones. I like it a little bit better than the Samsung because it's got a metal body, you know, instead of the plastic body. And to me, if you want to get something that's iPhone-like, you don't want a plastic-bodied phone.
Right. And what do you do? I mean, you could do everything on these phones.
I think we're pretty much at parity with these phones in terms of they all take good pictures, they all run popular apps, they all surf the web, they all do Facebook and Twitter. So you're really buying based on, you know, which one you like better in terms of design and maybe a few of the special things that they do.
What kind of innovation are you expecting? I mean, what would you expect for the smartphone market and how things evolve?
I think we're going to see a move towards bigger screens, 5-inch, even a little bit bigger, as people use these instead of their laptops or their tablets when they go somewhere. You don't to take the big shoulder bag with you with the laptop, and maybe things like motion control, like you hover your hand over it instead of actually tapping it, or eye control where you can scroll up and down by just looking at the phone.
Wow, they're talking to us, they're touching us. I mean, it's amazing.
And now they're watching us.
And now they're watching us. Dan, great to have you on the program.
Thank you.
Thanks so much for walking us through this market. Dan Ackerman from CNET. Up next, take a look at the news this upcoming week that will have an impact on your money. And then when you're trying to travel for peanuts, which city gives you the best bargain on the minibar? Trip tips coming up. Stay with us. For more On the Money, check out the website, otm.cnbc.com. And I hope you'll follow me on Twitter and on Google+. Look for @Maria Bartiromo. First, let's take a look at the stories coming up in the week ahead that may move the markets and impact your money this upcoming week. On Monday, Federal Reserve Chairman Ben Bernanke appears at the London School of Economics. He will appear with the head of the Bank of England as well as the chief economist of the IMF. On Tuesday, we've got more housing news that will be released. The S&P Case-Shiller Home Price Index is out, as well as the number of new homes sold last month. On Thursday, we get the third revision of the gross domestic product for the fourth quarter of last year. And then Good Friday wraps up the week. Banks will be open, but U.S. equity markets are closed on Friday for Good Friday. And saving your pennies when the hotel bill comes, TripAdvisor released its first index of room service affordability, comparing how much hotel travelers pay across the country for common incidentals. Denver came out to be the biggest deal. The combined cost of a club sandwich, water, peanuts, Coke, a mini bottle of vodka, and the dry cleaning of one dress shirt add up to just $40.46 in the Mile High City. That same bill will run you more than $60 in Honolulu, where a club sandwich tops $20 for that sandwich. At least in Hawaii, the sandwich comes with a view. That'll do it for the show today. Thanks so much for joining me. Next week, just what the doctor ordered in Startup Nation, how technology could make your healthcare better and cheaper. Each week, keep it right here where we are on the money. Have a great week, everybody. I'll see you again next weekend.
Ross needs an auditor who knows the industry as well as he does. For Brian, it's whether he can call the partner at midnight.
So?
They both came up with the same name, BDO.
People who know BDO.